Hi fellow traders, I'm making this video to share my dollar index analysis primarily, and I will let you look at different currency pairs with me so that we can understand what exactly we are going to trade today against US dollar. So of course the most popular counterpart is euro, so we are here on the weekly time frame of euro USD. Naked eye observation will probably tell you that this is a long run from this point to this point, so market should correct more. But if you go in little deeper technical observation, the movement to the downside is pretty harmonic. Look at this movement to the downside, pretty harmonic. It means that the market has made similar downward retracement and there will be no problem in upward continuation. Number two is, look at this price action of 3 days. It is clearly making 3 inside up, which is also suggesting further upward continuation. So even though market looks like it has made a longer run, however the recent harmonic retracement may suggest upward continuation supported by this price action, or you can say 3 inside up candle pattern. However, we are not going to trade this for a very long time, so weekly time frame is just for observation and understanding what we are going to do today in European session. We'll go to daily time frame. There is a contradictory scenario here. For example, here is the upward retracement, here is a similar upward retracement, which suggests that the upward retracement has been completed and this pair is supposed to move to the downside, but price action of last day is not supporting, and today price action so far has been a little bearish. However, it will not be considered on the daily time frame unless the candle of the day is complete. So let's ignore this price action. We will consider this one and this one. Comparatively, this candle which was made on Friday is smaller and does not make any bearish price action or bearish candle pattern. So here on daily time frame we have only one supporting factor which may I'm terribly sorry. Alright, coming back. So yes, I was just trying to rush myself up to make this video before beginning of the European session, which led me to cough like this. Anyway, so alright guys, I'm coming back to this observation that the daily time frame doesn't have anything other than this harmonic retracement to support the bearish movement, and on 4-hour time frame picture is totally bullish because you can see the histograms staying above this zero level and this downward crossover which happened here. If we draw a line, let's say we want to draw a line joining the upper edge of the histograms, then it will be a downward bearish crossover. However, the price action to the downside is not supporting this. Is compare the price action with the naked eye, you can simply understand this price is much more faster than the movement to the downside recently. So the downward movement clearly looks like a retracement. So 4-hour and weekly time frame both have more technical factors to support bullish movement, and if we go to the 1-hour time frame, it is looking like bearish. However, there may be upward reaction right from here. So what we are going to do is to wait for the further price action and we are going to see whether this candle is broken to the upside or not. So if the price breaks this candle to the upside, then we'll go long. And look at GBP USD, similar phenomenon has occurred here. Similar retracement to the upside, then market tried to continue to the downside. However, the Friday price action is feeble compared to the Thursday price action. So here also the scenario is same, that there is no bearish supporting factor except for this similar harmonic upward retracement which suggests downward movement. Otherwise there is nothing supported by the price action. If we look at the weekly time frame, this movement to the downside is, let's compare what is the size of second downward movement, slightly bigger than that. However, this will not be sufficient to push the price unless there is a supported price action. Look at the 2 weeks. This was definitely a bullish price action, you can call it a hammer. Another one is a dozy, which again saying is that the price may go sideways but certainly not bearish. So we do not have bullish price action on weekly time frame, we do not have bearish price action either, but what may support bullish price action here is a probable Gartley. So what is Gartley? Gartley is a harmonic price action. We do not need to even remember the names of the pattern. However, we are trying to understand the price action to understand what probably can happen further. So if we draw like this may be one triangle, and yep, and then second one may be like this, insert shape and triangle. And this certainly is a pattern that's just continuation to the upside. So look at the second triangle, which is smaller, and this also is called ABCD, downward retracement. For example, this is the A, this is the B, this is the C, and this is the D. So upward movement is still possible, which probably should be figured out by price action. So let's delete this and let's move on to 4 hour. Alright, cool. So here we are on the 4 hour time frame, and what's happening here on 4 hour time frame, that the price is consolidating inside a smaller triangle. It means that it can be broken to the either side, and for better visibility I'm gonna make it conspicuous so that you can see this very simple symmetric triangle, and price is inside it. So if we want to go for a swing trade, even if we are intending to keep the swing trade for the entire day, we are gonna wait for the breaking of this symmetric triangle through to either side to enter a trading position. I rather suggest that bullish side will be more favorable. 1 hour time frame has the same, this is the triangle, we have nothing. I mean, I'm just ignoring the relative strength index because it has been swinging around this 50 line, so there is no clarity about the trend here. So now let's look at the let's make the plan what we are gonna do. As long as the price stays inside the triangle, we can scalp a couple of pips, maybe 5.0, 6.0 pips, in other words 50-60 points, and we can exit. And we shouldn't hold the position if the price breaks below. When I say break, I mean a 1 hour candle closing below the lower closing below the low of this high wave candle. Look at this candle, this is pretty long candle, length is 92.8 pips or 928 points. So for a longer term swing trade, we need to see the price breaking below it, or at least breaking above this triangle. So right now we can scalp. For example, see the price action is right now bearish, it is gradually coming down, so we can, as soon as this white candle is broken down, we can enter the sell position, take maybe 50-60 points or 5 or 6 pips and exit. We can also try to enter multiple position beyond this triangle. Let's say we enter a sell position here, price goes to the upside, we wanna enter another sell position, and we try to exit at the midpoint of two positions. However, I'm not suggesting a grid strategy here, I'm simply suggesting we will do this as long as the price stays inside this high wave candle. So yes, coming back to this GBP USD. So you understood what we are gonna do. We are gonna scalp a few pips as long as the price stays inside this high wave candle. USD JPY overbought, there are high chances of downward correction. At least we do not have confidence here to enter buy in USD JPY, so let's leave this. USD CAD, it again is some sort of overbought, technically not overbought because you can see the RSI level is 62, so it's not overbought unless it is 70. However, this doesn't look like correct area to enter a buy position. Even if we look at this movement, for example, see this is a these two are parallel lines, what we call it equidistant channel. So price has been moving in this, but recently price accelerated since the last week of August, and then it is very near to the upper border of the channel. So downward correction is technically favorable. However, we are not going to decide according to this just this uh, price action or this equidistant channel. We're gonna wait for today's CPI. Yes, Canada is releasing CPI today. We're gonna wait for this and act accordingly. So we are not touching Japanese yen, we are not touching Canadian dollar either before the release of CPI. So what we have today to trade in European session is euro and pound against dollar. So plan is to scalp and then wait for the further price action. Before I finish this video, let me show you what's happening on the dollar index for better clarity of understanding where dollar probably is headed to. So we go to daily time frame, and here, even if we simply consider this upward movement to continue, this movement to the downside is not similar to the previous one. So price may return back and complete the retracement. Number two is the price action. Look at the Thursday candle, which is definitely a big candle, bigger than all of these candle in this movement to the downside. Friday candle is feeble, so price action is not supporting any bullish action. So there are high chances that the dollar may fall, and we may take some advantage of this. So that's why when I said if we are going in favor of dollar, for example, if we are selling Euro USD or GBP USD, it should be done like a scalping, and we should exit. On this time frame of Euro USD, we do not have anything to say that okay, this is the range where we have to enter multiple position, and beyond this range we cannot enter multiple position. We do not have such kind of scenario here in Euro USD. So if you want to skip this, that will be a better decision. On the other hand, we have a clarity of price action, that this is the price range. For example, this high wave pattern, removing the triangle, so this is the high wave pattern. So as long as the price stays inside it, we can scalp, and we can even place multiple positions, and we can always manage multiple positions in a way that I mentioned already. So this is my total observation, and I am going to scalp GBP USD as long as this is going to stay inside this high wave pattern. And if I see the break to the upside, the break of the triangle, then I will go for a swing trade. And if we get a chance to go for the swing trade, then this must break this upper this upper border of the current price action. This candle was made on November 13th, so it should break the high of November 13th. So our target should be above 32.15. So let's see what price action we get today, and we'll proceed accordingly. I haven't seen anything what is going to happen on Tuesday, so this plan is going to stay only for the day. Thank you for watching.